Hey, Jonathan York from Bay Financial Partners, looking at the investment markets. Really quite interesting times at present with the Chinese authorities surprising the markets with the devaluation of the yuan. That's come down by about 1.9% versus the US dollar. Now it's really quite interesting to see how this is going to play out, and everyone is just hopeful that it's not going to signal the start of a currency war, because with all the markets now sort of interconnected, that really would be pretty bad news out there. Looking at it, it looks like the Chinese authorities is just trying to give a little bit of encouragement to the domestic economy, which has been struggling a little bit, and really just trying to keep that GDP growth at around 7%, which sort of stated on several times is going to be their sort of base level for the GDP, and this really just a little bit of a stimulatory injection into the domestic economy. But it certainly made equity markets a little bit nervous out there, and just potentially throws another sort of spanner in the works now with the Fed. As the Fed up until this announcement had been looking the sort of odds on a rate increase in September have been rising above that sort of 50% for the first time. Now this may just cause the Fed just to take a little bit of a pause and just wait and see how the markets sort of pan out after this surprise move. On the flip side of that, though, the Fed really is running out of time. It said all along, pretty much from the start of the year, that it would be looking to increase rates once the domestic economy in the US warranted it, and certainly on the unemployment data, etc., and growth, it does. And as I say, the Fed has really come out and sort of nailed its colours to the mast, really, and saying it will be looking to raise rates this year. And so if it doesn't, it does sort of throw into a question a little bit of credibility there for the Fed. Here in New Zealand, there was a further downgrade to the dairy payout, as most sort of analysts expected. That probably highlights the fact that there will be a further interest rate cut now in September to take the OCR down to 2.75. That's obviously pretty bad news out there for investors who are looking at keeping their money sort of on term deposits, as those rates are falling all the time. There are other income options out there with sort of dividends, high dividend shares, property trusts, etc. And certainly if you're interested in those, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.